Tesla just hit $2,000 per share. Is it a buy? Is it a sell? Or am I gonna go back to the Oregon Trail and get dysentery? Which, if that happens, I better make sure my life insurance is still up to date, which I can get in the description down below, because that's a sponsor for this video. Get life insurance in as little as 5 minutes. Hey everyone, me Kevin here. Today, I'm gonna break down what I think is going on. A very, very strange and bizarre coincidence of what's happening in Tesla stock, and then we'll make some recommendations. And of course, I'm just a dude on YouTube. I'm wearing a dysentery shirt with what some people think is a members-only jacket in the middle of summer. So take my advice for what it's worth. So let's get started. First, I'd like to clarify that, yeah, I am a dude on YouTube who has been pitching Tesla stock for a while. And I'm not saying that to pat myself on the back, because I realize our ability to invest in stocks fluctuates based on our income over time. So it's not like you should feel bad that you didn't buy more stocks in the past. That's how I feel too. Everybody feels that way. It's like, I wish I had more money and could have bought more in the past. Everybody feels that way. That's totally human nature. So don't feel bad if you're feeling that way. What I do want to do though, is I just want to prove to you that, yeah, I do put my money where my mouth is. When I say I have over 50% of my portfolio in Tesla, I got over 50% of my portfolio in Tesla when it comes to stocks. And this is it. This is my M1 finance. I do have some money at Chase and Robinhood and Tesla as well. But just to prove to you, just the green number there is the gain just my Tesla shares alone have experienced over, roughly, probably most of this is roughly the last 8 months when I began using M1 finance. And so, obviously, if more than half of my portfolio is in Tesla, it's very important that I stay very attuned with what's going on with Tesla because, again, I don't want to go back to the Oregon Trail, okay? I like autopilot way too much. Way too much. I've gotten so lazy when it comes to driving. So what the heck is going on? Well, here's what we're going to do. We're going to start with a bizarre coincidence. Then we're going to talk about what I actually think is happening. Then we're going to talk about the recommendation. Okay, so here's the weird coinkydink first. The coincidence. This is so weird. 73 days ago, there were 250,000 users of Robinhood holding shares of Tesla. 250,000 accounts that had at least a Tesla share, okay? Today, there are at least 563,000 Robinhood accounts holding Tesla stock. If we divide those two, we get about an increase of 225%. 225%, and remember, 200% is doubling. So that means we saw a more than doubling of the accounts at Robinhood holding Tesla shares. Well, guess what just happened over that same period of time? 73 days ago, on June 7th, Tesla was trading for about $885 per share. Well, now, if I divide $2,000, today's share price for Tesla, by $885, the June 7th price, I also see a 225% gain in the share price. That is a very bizarre coincidence that the exact same growth in the amount of people holding Tesla stock at Robinhood perfectly matches up with the share price gain over that same period of time. That's weird. Now, Robintrack's data is a little bit behind, so it's not exactly perfect, but it's a weird coincidence. It appears that people on Robinhood are going nuts over Tesla stock. Now, this is not a science. Obviously, this is not a science. Let's hop on over to where you see this data, just so you can take a peek at this and tell me what you think about it, because I'll tell you, it seems a little weird, okay? This is Robintrack.net, and again, it's a little outdated. The price is a little outdated here, and that's fine. We're gonna take a look at a trend here. Quick note, this is not sponsored. This video is sponsored by life insurance and the awesome lectures and courses that I have on real estate investing, stock investing, how to make YouTube videos, all that good stuff. Use coupon code Larry, that's down in the description, to join as well. That coupon code expires soon, so check that out. Would love to have you there. We talk about stocks in the market every single morning through live streams that I personally hold with you. But anyway, let's look at this. So here you go, June about 7th, there's that 250,000 holders at the price of about $885. And look at the growth to about 563,000 users. Again, the data is a little bit delayed, but it's bizarre. It shows you that almost one-to-one alignment in growth over that period of time. Which there's something that seems to be really interesting about Tesla and Robinhood investors, or investors into Tesla through Robinhood. It seems like when a stock turns green, people are more likely to buy it. At least that's been the recent trend, which is kind of the opposite of what I like to do. But take a look at this. You get this green line that has a massive run up between May and right around here, the beginning of July. And then all of a sudden, because the price has gone up, you get a surge of more investors who come in, which then pushes the price up even more. I guess you could almost call it kind of like a viral stock. This would be the opposite of what you would expect to see with profit taking. For example, if we go back to 2018 over here, this is what profit taking looks like. When you have 112,000 people holding Tesla stock, and then all of a sudden you see the price goes up, and you see the amount of users holding Tesla stock go down. That's profit taking over here. Let me just get rid of the picture so you can see that a little more. See, that's what profit taking looks like. This is just following the viral trend. And that makes sense because Tesla is a company that not only provides green vehicles, but there are cars that drive themselves. Honestly, I would prefer not to drive and just let the car do the work, and it's really good at it. Plus, I could put Tesla solar panels on my house. I could get a Tesla battery for my house, and I don't have to worry about having a generator that never seems to start when you need it. Folks, this is like the definition of the future, and I think that's why we're seeing that hope. But hope is not a good way to trade. In fact, hope is generally not a good way to invest. That's exactly how I don't invest. I invest where I see value, where I see growth, especially if I could buy things cheaper than what I think they're worth. That's what I do every day in real estate. I see something for $400,000 that I know could be worth 600 grand. Boom, that's a buy for me. That's easy peasy. So what the heck could we possibly glean from Tesla's valuation that would make us even remotely think that $2,000 per share is a good deal? Maybe it's not. Let's talk. About 10 days ago, I outlined my thesis for why Tesla might be able to produce and sell 3 million vehicles by the end of 2024. Producing a profit of about $50,000 per car would lead to about $150 billion worth of revenue. At a margin of around 26.5%, this company rakes in a profit of around $39.7 billion. They're going to have obviously operating expenses and taxes, and it would be reasonable for this company to return about $73 in earnings per share by the end of 2024. This is something really important to remember, is this company is not trading based on today's price to earnings ratio. It's trading based on its future potential earnings. And that's exactly what we're seeing here. If Tesla ends up nailing these figures, it's a big if, right? It's speculation. But hopefully we can make educated opinions, which I broke apart with gigafactory production, the rate of production we're seeing, the sales backlogs, all that good stuff helps us sort of make these deductions. And so if these numbers are true, then it would be reasonable that by the end of 2024, Tesla could be worth around $29.40 per share, or just shy of $3,000 per share. And sometimes these growth companies, if they continue to show exponential growth, sometimes they run up to 100 times earnings per share, in which case this stock could be a $7,000 stock, which there's plenty of clickbait on YouTube about, oh, Tesla's going to 7,000. That's how they do it. They just multiply it by a larger earnings figure, right? Well, if you bought it today at $2,000 instead of $1,500, which was the last time I made a video on the company, that over the next 4 years would work out to about a 10% return compounded per year. That's not terrible. It's actually pretty good, honestly. And if you're wrong and these numbers are better, great. If the numbers are worse, you're probably still somewhat insulated because there's so much potential growth with the company. Unless, of course, Tesla goes bankrupt and nobody wants to buy Teslas anymore. So Tesla right now produces just under 500,000 vehicles, but has the capacity to grow to produce about 2 million vehicles by the end of 2021. Let's say they never grow past 2 million vehicles, and we change this math to 2 million vehicles. Well, at 2 million vehicles produced by the end of 2024, that means they get to the end of 2021, and then no growth for 2022, no growth for 2023, and no growth for 2024. If you think that Tesla's not going to grow over 2022, 23, and 24, And then a fair price for Tesla stock might be about $1,960 with no growth for those last 3 years, which means you would have a slightly negative return, right? About losing about 0.5% for a fair value at about 40 times earnings, in my opinion. Obviously, these numbers could be wrong, but it goes to show you that even if they stalled, the value might not be that terribly wrong at 2,000. Now, do we think that Tesla really has the massive potential to return 20 to 30% per year? Maybe. Let's try to see what they'd have to produce. Let's change this 3,000 units produced and say they just grew exponentially in 2023 and 2024. We don't have hyperinflation that destroys the world. Let's go to 5 million vehicles produced per year. There we go. 5 million vehicles at the same margin, let's say. We'll keep everything the same. We'll go ahead and bump the operating expense. Oh, we've got them at 15%. That's fine. So I've already got all of this percentaged out. Perfect. That would be earnings of about $122 per share. Times 40 times earnings means this could be a $5,000 stock if they produce 5 million vehicles and they make just no money from energy, semis, and automotive licensing or autonomy licensing. Call those loss leaders, you know? Sell the solar panels at a loss just to get people into the cars. Fine. Honestly, they probably do that anyway. That would work out to a 25% return per year. It's actually not terribly far-fetched. So is Tesla expensive today at $2,000 per share? Heck yeah, it is. It's at the peak of where it's ever been. Based on today's earnings, it's a terrible investment. Based on the potential future and how many vehicles you think Tesla can produce, it could be a phenomenal investment. So here are your 3 choices. You can, 1, buy, hold, or sell. You already knew that though. So what's the case for buying? Well, buying, in my opinion, the best way to buy Tesla right now would just be to buy it as part of a basket of other stocks. For example, if you go to metkevin.com/1337v4, I'll link that down below, metkevin.com/1337v4, you'll see that that's a basket of about 40 stocks where I collect stocks in it. And when I just need to park cash, I can park cash in that sort of group of stocks if I want to. That way I'm not overexposing myself to Tesla, especially at the higher prices. I personally like using M1 Finance because they make that really easy for me. Not the biggest deal. You can do these manually on Robinhood or whatever. But take a look at this. When I jump over here, this is, for example, my 1337V4. And you can see if I put money into this, if I put 10 grand into this portfolio right now, it's gonna trickle the money out over all of the different stocks. If I was going to put money into the 1337V4 right now, I'd be okay with it. About 12% of my money would be going into Tesla stock. That's okay. I'm all right with that even at 2,000, and I know that seems crazy. Would I individually buy Tesla at 2,000? No. And that's because Tesla usually has a tendency, not always, but it has a tendency of running up for 10 to 21 days. Right now, we're on about day 10 of the run-up. So there's a good chance that Tesla at some point within the next couple weeks will see a nice pullback. Hopefully, it pulls back to like 1,700, to 1,600, to 1,500 again. If it goes lower, whatever, great. More opportunities to buy the stock. Now, if you're watching this video after Tesla splits, then any number that I refer to, just divide it by 5. I personally would love to shop for Tesla around $1,500 to $1,600 per share. That's when I last bought Tesla shares. That's where I'm more comfortable. That's where I really start liking the return potential based on my future outlook for the company. Now, if it continues to sit around 2,000, I don't know. I would just probably buy it, like I said, in that basket of other stocks where 12% is going into Tesla. I've got some money going into Amazon, Apple, and some of the other ones. That way I'm still getting a heavy Tesla exposure, but I'm not putting everything too heavily on Tesla, which I have consistently done, but I'm doing less and less of as Tesla continues to go to the moon. Now, that's the buy mentality. What about just holding? In my opinion, that's totally fine too. Holding is something that I've been more tempted to do lately just because everything has run up quite a bit. And so I don't mind just waiting for that next red week. The last 10 days, almost the entire market has just seen green, and I'd prefer to wait for a little bit more fear in the market. The problem with that is there's no guarantee that it's gonna come and then end up being lower than today's prices. And that's always the bummer about waiting. And this is why people say don't try to time the market, get in the market, and then wait, right? Don't wait to buy and then wait. And it makes sense because look, you could have bought it at 1,800 and let's say it goes up to 2,400 and then it falls to, 2,100. Yay, I'm buying after it fell 15%. Sure, but you could have bought it when it was green at 1,800, right? That's the mind trips that you have to be worried about. My opinion, I just don't like buying when things have rallied so crazy green. I'd rather wait to see some more pain in the market, and then whatever that price ends up being, that's when I'll buy. So me, I'm mostly a hold right now until I start seeing some more softness in the market. And generally, you don't have to wait more than a couple weeks to start seeing some fear come back in the market. There's always some short seller or some report that's gonna make everything turn red for a few days. That's the time to be ready for them. In terms of sell, should you just dump out a Tesla and sell? I don't like that idea. One of the reasons I don't like that idea, and it's probably the biggest reason, look, I live in California and it's taxation. Taxation sucks. If you have short-term capital gains, you get taxed at your ordinary income tax bracket. And you can always check with your CPA how you could work that out. But here in California, that means you're paying somewhere between 35 to 50% in taxes on your gains. No thanks. Like, literally the stock could plummet 35%. That's what I'm doing when I sell, in my opinion. So I hate paying taxes. No thanks. If you're in maybe like a Texas or Florida where you don't have to pay state income tax and maybe your marginal tax rate isn't that high, fine, maybe you're only paying 25% or 20% in taxes. But still, I would be buying the stock if it fell 20, 25%. I'm not interested in closing out my Tesla position, so for me, I'm a big hold. Thanks so much for watching my updated thoughts on Tesla. I hope you appreciated them, and folks, we will see you next time.